Good morning, everyone, and welcome to week 3 of EDCO's 64th annual virtual conference and showcase, EvolveON. Even though the conference is a bit different this year, I'm sure you'll all agree that the 2021 EDCO conference planning team has delivered a diverse and thought-provoking program that demonstrates just how resilient and creative Ontario's economic developers are and how we're positioning to take advantage of the opportunities ahead. Many thanks to my co-chair, Kate Burns-Gallagher from the Western Ontario Wardens Caucus and the planning team who volunteered their time and talents to create such a wonderful program. Please take a few minutes to visit the conference website for the list of these amazing people. I'd also like to express our appreciation to our outstanding roster of presenters. Their photos and bios have all been posted on the EDCO conference website. In lieu of presenting speaker gifts, a contribution to the EDCO Scholarship Fund has been made on their behalf. A special thank you to all of our sponsors and those in our Innovators Showcase who are also listed on the conference website. A reminder to join us for the EvolveON virtual cocktail reception tonight at 4 p.m. I know everyone is probably missing each other, so come join us. It's going to be a great opportunity, and take note of the link down there in the chat. I'd like to go over a quick housekeeping details here before we begin. So to connect to EDCO 2021, you will receive your login details to join the webinars on Tuesday of each week. Please check your spam or junk folders. If you don't receive your login information, please email Taylor Chamberlain at the EDCO office and we'll post that address in the chat. Well done, ladies. You will receive the login details to the session videos at the conclusion of the webinar series. All of today's sessions have been pre-recorded in an effort to ward off technical gremlins. We don't want that. However, our panelists have joined us following the live to answer all your questions. We encourage you to actively participate in all the sessions through the Q&A and the chat. A reminder that the Q&A chat buttons are located at the bottom of your screen. A reminder that you also have the ability to upvote questions. You'll see the raised hand function. Just pretend it's not there and use the Q&A to ask your questions. Please also engage with your fellow attendees through the chat, either as a group or individually. It's a great way to share your thoughts on the presentations, provide resources, and relevant web links. Finally, if you experience technical issues, please send an email to the address shown in the chat. Excellent. And now I'd like to welcome our session sponsor, CUSMA Moraru, Senior Business Immigration Manager from Fragaman, to give a brief welcome. Welcome, CUSMA.
It's good to be here. Thank you, Belinda. It's my pleasure to welcome you all to this morning's first session, Looking Over the Border, Opportunities with Evolve Ontario with CUSMA. Fragaman, a premier immigration service provider and a supporter of foreign investment attraction, is pleased to have the opportunity to sponsor the session. Whether you're a business or an individual, a global organization, or just starting out, our services into over 170 countries worldwide are customized to meet your immigration needs. We offer more than a transaction. We offer a lifetime experience and a pathway to citizenship. Without further ado, let's jump right into our first session, Looking Over the Border, Opportunities to Evolve with CUSMA. Thank you.
Good morning, I'm Dan Utso. I'm an international trade attorney with Thompson Hine, located down in the States. Our firm represents a number of Canada-US companies, and we're proud members of the American Chamber of Commerce in Canada, AmCham Canada, which is one of the supporters of this event. And a number of our speakers, as well as myself, are board members of that organization as well, which is the voice of the US industry around the world. There are AmChams all over the world, including, of course, in Canada. In fact, AmCham Canada is a little unique in the sense that not only is it full of US companies doing business in Canada, but a number of Canadian companies that have operations in the United States, given the inextricably intertwined nature of our trading relationship. On behalf of AmCham Canada and all of our speakers and Thompson Hine, we thank the organizers of EDCO, in particular, Aaliyah, Cindy, Lena, and Trevor, for organizing this panel and putting together this extraordinarily talented group of speakers to address the issue today of the Canada-US-Mexico agreement, and how will that be part of the Evolve Ontario? And we'll call it CUSMA, USMCA, New NAFTA, TMEC, no matter where you're from. But you know, in the time warp, the COVID time warp that we're all living in, that everything before March of 2020 or February seems to be ancient history, we almost forget that CUSMA is only less than a year old. It was about this time last year, I hate to mention it, during the first impeachment of President Trump, that we slipped in the ratification of CUSMA in the United States, Mexico quickly, Canada in March. This came into effect on July 1st, and that's a credit to U.S. Customs and Border Protection, Canada Border Service Agency, and many others that hustled throughout the spring when the world was turned upside down to get this ready to go. But CUSMA was a bit of like a lot of 2020 weddings that we all know. We got formally hitched, but we haven't had the whole rollout and party yet. And because we have been in a period of informed compliance or less strict enforcement, and that all ended on January 1st of 2021. And so we're going to start to see the implications of that for our companies that are looking at expansion in business. We have three of the best around to talk about this topic. Even though I said it only seems like a year ago, I think the four of us on this panel seem like we've been talking about this for years now. So it's been forever and a day with CUSMA in our lives, but now we're in the place where we're going to see it operate. Our first speaker today is Ross Prusakowski, a manager and principal economist at Export Development Canada, who's going to demonstrate the big picture here. How does this all work in practice, and what are the potential implications, particularly in a world that's changed since CUSMA came into effect, and certainly since it's been negotiated. We then have Aileen Lushley. Aileen is not only a board member of ours on AmCham Canada, but she's most importantly the Vice President of Public Affairs at UPS Canada, and she'll be giving us the perspective from the folks that are on the front lines doing this every day, and not only moving our goods and services, but saving lives right now, and moving PPE and vaccines around the world. And last, but certainly not least, when it comes to CUSMA, is Flavio Volpe, the president of APMA, the Automotive Parts Manufacturers Association, who was truly involved in this, unlike most others, if any other, in terms of, particularly when we were at impasse in 2017 on CUSMA, really came in along with the government of Canada with a proposal that shaped the automotive framework and the great opportunities that we have. A lot of talk over the last couple of years has been about the challenges in CUSMA, but what we'll talk today is really about where the opportunities are for many of you doing economic development, and many of our companies that are looking to expand and invest. And with that, I'll turn it over to you, Ross.
Perfect. Thank you, everybody, and good morning. Thank you very much for having me. So I'm going to start at a very broad kind of outlook, because though CUSMA obviously has changed the business environment between Canada, the United States, and Mexico, that's really not the most important thing from a macroeconomic perspective, and really from an economic perspective. It'd be really hard to come in and for me to focus on that without really talking about the COVID of it all, to use a phrase. So what I'm going to talk about is how things are stacking up this year, and how this is going to slowly transition into the future, and especially with an eye on recovery, and what that means for Canada, the United States, and a little bit of Mexico as well. So next slide, please. So really the key message I'll start with, and we can go to the next slide as I speak, is we're starting off 2021, but we're starting off pretty much in a same, or in many cases worse place than we ended 2020 off. It seems like 2020 has been maybe 20 months long, and this is probably the 21st month. In most of the world, we've seen a significant surge in global COVID cases. That's important because really, as I mentioned, you can't separate the underlying economic activity, the underlying labor market activity, global trade patterns, global investment patterns from what's going on with COVID. So you can see on the chart on the right that I've got here how cases have spiked, and you can see how it's distributed globally. Obviously, Canada hasn't had a good path lately, but also our partners in the United States have not had a very good path. Next slide, please. At the same time, we are starting to get a bit of optimism. So at the end of last year, we saw a number of vaccines approved and started to be distributed around the world, but it's been a very slow rollout. We're starting to see some politics get into vaccine supply, as well as also how that may impact distribution and trade. What we can say, though, is there have been a few countries around the world that are seeing some impressive distribution of vaccine. This is even more impressive when you consider that in most cases, none of the vaccines are eligible for children. So this is actually a much smaller share per 1,000 people, because you have to just, or per 100 people, sorry, you have to remove all children from this. But if you look around kind of on the bottom of the screen, you see that the United States, Canada, and especially Mexico are lagging in terms of inoculations and getting jabs into arms so the populations can be vaccinated. That's pretty important, because until you get towards more vaccinations or reach a level of scientific herd immunity, that's really going to constrain mobility of people. Next slide, please. And so at the same time that we are seeing kind of this slow rollout of vaccines, we've seen uncertainty and challenges in the global economy kind of spike all over the place. What we see here is kind of that it's trended down in early 2021. I would say it's actually, this is lagging information, so we've probably seen a more significant spike driven by events in the US Capitol on January 6th. But we have seen, with the conclusion of the US election, with the pathway of vaccine rollouts, with potentially some more trade certainty with the new US positioning, that we will see a little bit more policy certainty. That's going to be important as we talk about kind of the business environment in the United States and Canada, but also how businesses want to start investing. Next slide, please. So I'll put a significant caveat in terms of all of the thing I'm talking about, is that I wouldn't look to financial markets as a trend of where the economy is going. There's been a lot of activity lately, depending on how involved you are in Reddit, around how the stock market is moving and how it's become very disconnected from underlying global economic conditions. We've seen stocks, for example, last year we saw Hertz, which was in bankruptcy. We've also seen the shell of Blockbuster Video take off in the last few weeks. We're really starting to see that, global stimulus, as well as money that's being put into hands of people who are maybe not needed as much in the United States, is really finding its way into financial markets, and people are beginning to chase returns. So at the same time, stock markets have really taken off since the depth of April last year, as this liquidity and support has flooded in. At the same time, yields on global debt have declined as people are chasing any return. So though I'm about to talk about COVID, if you look at the financial markets, you might get a different picture than what we're seeing in other segments of the economy, both in Canada and globally. Next slide, please. Same thing with commodity prices. And this is a similar kind of story that we saw post-Great Recession in 2008, is as the liquidity that central banks and governments have pushed out, whether it's fiscal stimulus, whether it's monetary stimulus, it has to find a return. All those pension funds, all those big investors, they can't just sit and hold US treasuries that aren't yielding anything, or wait for inflation to spike back up. It's just not happening fast enough. So as you see back in the last slide with the financial markets and debt markets, but also commodity prices, money is finding a way to try and chase a return. Again, it's a bit disconnected from the underlying global economic activity, where broadly, we still haven't seen a significant recovery in most economies to the level that we saw last January, February, before COVID hit. Next slide, please. So let's take a look at some more maybe personal and straightforward indicators that are probably giving a better picture of where we are heading into 2021 and the pathway going forward. This is one looking at global international air travel. And you can see there's a significant decline in terms of where we are compared to a year ago. Though there's been some recovery, we really haven't seen a huge spike. In fact, the most significant spike there, if you look in that really far right, there's that little tiny hump where I've highlighted the Christmas holiday break. Despite the fact that we saw the highest number of air travelers in the United States in the last year, same thing in Canada, same thing internationally, it's not anywhere near enough to close the gap and get us towards a, quote, more normal circumstance. This is a more real indicator of how slow global economic conditions are and how weak there is business activity around the world. Some of that obviously has been taken up by events like this, where we're doing virtual meetings and conferences rather than doing travel, but that is still a significant gap. And the virtual can't fill that whole gap completely. Next slide, please. Similarly, another more real indicator is if we look at the Canadian trade patterns. So obviously, as mentioned by Daniel off the top, we've had CUSMA. In fact, we've also had the Canadian-European Comprehensive Economic Trade Agreement with Europe and Canada. We've had CPTPP. There's been a host of developments on the trade front. And we haven't really seen a significant recovery in overall Canadian trade. However, that's because it's bifurcated. So things like merchandise trade, where governments have been very, very, very strong about trying to maintain open supply chains, where obviously in Canada, the United States, you've had railways and truckers be able to move back and forth across the border. You've actually seen a pretty significant quick V recovery, where the depths of last spring, you saw a pretty significant decline and then a pretty straight recovery. And things have begun to improve both on the exports and import side. Obviously not where they were kind of coming into last year, but that is a positive trend. Of course, the other part of the problem is on the services side. So services is some of the bigger part of the economy in in both Canada and the United States. Service is actually the biggest part of the economy. It's not as big in terms of trade as merchandise just yet, but it's been catching up. And the signs on the services side are not nearly as positive. This counts for things like travel, tourism, business conferences. A lot of the digital economy is captured in there, and we're still not seeing a significant recovery. It's much weaker, and we're having a much slower growth in those segments. That is not a positive outcome for a lot of companies that have been holding on in 2020 and are hoping 2021 is going to bring them more positivity. Next slide, please. So those real indicators are showing that we're seeing some weakness. Same thing in the labor market, though again, it's kind of like the trade side of things. And I'm showing Canada here, or Canada and the United States here. This would speak to any number of global economies. You've seen a significant recovery from the absolute depth where everybody was locked down, unsure where things are going to go last spring. But we've kind of slackened off and we've tapered off as the uncertainty around, especially in the United States, government supports remains. And in Canada, as we're waiting for global trade to recover, have a more certainty around our trade paths, we're just not back to the same level, and we're certainly not on the same trajectory we were before. This is going to impact businesses going forward, as consumers obviously are uncertain about what their labor market or their work situation looks like. The labor market's going to be a bit slower, and we're going to see a little bit less spending. That's an important thing to consider as we get towards the rest of the year, even as the numbers start to look good. Next slide, please. And this is just a bit of a different cut to kind of emphasize and bring in that trade slide that I showed before with the labor market. And you can see there are some industries where things are doing okay. And this will get into something I'm about to speak to about the K-shaped recovery, as economists have started to term it. But really, there's a whole swath of the economy are experiencing a very different experience. In some of them, like finance, insurance, and real estate, manufacturing, education, things are actually improving. You're seeing hiring. But that is not nearly enough to cover off the significant declines in things like accommodation and food services, hospitality, and a few other areas where it just really hasn't rebounded. And this is going to be the lived experience of people and different industries. Next slide, please. So this gets into the conversation about 2021 that I think is really important for people to be mindful of, is that there were a lot of changes that are always undergoing in the economy, and COVID, in our view, hasn't stopped a lot of them. It actually has accelerated a huge amount. So for example, what I pulled out here on the chart is that the shift towards a digital economy isn't going to slow down. In fact, if anything, COVID has absolutely accelerated. So where we might have been in 5 years, we're probably going to be in 2021. So now if you're just a physical retailer, because of COVID, it's going to be much more difficult to survive. Then you have a physical presence, a digital presence. I think some people have started to call them omni-channel retailers. That is really going to be a significant change to the economy. That's not going to get rolled back. Similarly, media, we've seen the shift away from things like movie theaters and also concerts, and restaurants and entertainment are all going to look significantly different, partly because people's uncertainty around how health outcomes are going to be as we get towards the end of 2021 into 2022, but also because people are really comfortable with some of the changes. We don't all love being at home all the time, but if you can be at home and only pay a monthly subscription fee versus have to pay $22 a person to go see a movie at a theater, that's going to change the nature of the business and the nature of how consumers engage. And what we can say is that it's still pretty uncertain in some industries how much of the COVID shock is going to remain. We have an idea that there will be some recovery in some sectors like travel and tourism, where because of restrictions around travel right now, you can't really travel. There'll be some recovery, but it's not clear how much people are going to be wary about getting on airplanes, traveling at great distances after COVID. And that's something that's really making it a challenge for economists, including myself, to be with any certainty about which industries are going to come out as, quote, the winners or losers of the circumstance. Next slide, please. So I'll just skip into our economic outlook, and next slide. And the one thing I'll caution is that the numbers here for 2021 look quite good, but that's only in comparison to the depth of decline in 2022. This is where, to go back to, junior high math, when you divide something and you make it smaller and then you grow off that base, you get a pretty significant pop. But the problem is that even with these growth rates that we see in 2021 and even into 2022, we're still only backfilling the hole that we've left in a lot of major economies because of COVID. So we are expecting that we're going to see some notable growth in Canada, the United States, and Mexico, but it's still not going to anywhere bring us back to where we were on track for as of January last year. Similarly, in a lot of other economies, the only country that we're really seeing actually significant growth above their trend line is China. That's partly because of they were hit earlier by COVID, but also because of the actions of the government and the way they've been able to restrain kind of second and third waves of the outbreak. But elsewhere around the world, we are seeing a slower kind of growth pattern, even if the numbers look great, just because we're still not back to the same levels of economic activity before. Next slide, please. So you can see here, this is just kind of a quick sense. We do a quarterly forecast. This is one that was released in December. So we have seen, some revisions, but if you look, even in 2022, even as we've gotten more information, because of the path of COVID and because of the wave of COVID that we're seeing and how extensive it is around the world, we've actually reduced our outlook for 2022 in the fourth quarter compared to where we were in the third quarter. That's a concern as well that I'd like to flag for everybody thinking of doing business into 2021 and 2022, is that if COVID spikes and if the COVID spikes remain prolonged, people are going to revise their intentions downward. So we've had to do it even within the span of 3 months. And especially if there's more vaccine uncertainty or if COVID variants lead to less impactful vaccines, that'll impact growth and that'll impact business as well going forward. Next slide, please. The one thing I'll note just quickly here is that because of the significant uncertainty, because of the significant supports that governments have put in place, there's a lot of information here, but I'll draw the attention to the interest rate profile at the bottom. Our outlook is that we're not going to see interest rates increase for a prolonged period of time. Both in Canada, the United States, as well as Europe, central banks have made it clear that they want to make sure that there's sustained significant recovery before they even think about removing the interest rate support. So we're probably talking at least 3, if not longer years before central banks begin to move interest rates up in earnest. Even if there is periodic ticks of inflation above their targets, central banks have made it clear that they're comfortable doing that given the depth of the declines in terms of inflation over the last year because of COVID. So I know there's been a lot of talk lately in terms of inflation has ticked up. Will that cause banks to move? In our view, and the clarity from the central banks is they won't move. They're willing to hold on to that longer term vision, even if there is some temporary inflation blips. Next slide, please. This is just an quick outlook on our commodity prices. Happy to answer any questions about them, but I believe that's probably towards the end of my presentation. So if I go to the next slide, I think it's just our disclosure. So thank you very much for having me. It's been a great pleasure to speak with you, and I look forward to any questions that people may have at the end of this.
Great. Well, while we wait for my slides to pop up, I'll just reintroduce myself real quick. My name is Eileen Lucy. I'm with UPS Canada. And what a delight to follow that presentation by Ross, setting the scene for us. And I suppose what I hope to offer over the next couple of minutes are some perspectives, some wheels on the ground perspectives from UPS Canada. I find the theme of this session to be so captivating, and I think that's probably because UPS, we really consider ourselves to be part of the infrastructure of international trade. And for the longest time, when we have thought about trade and the movement of goods, our main focus has always been on trade agreements. We've always seen them as very powerful tools in terms of influencing the shift and dynamics of global trade. But I would say all of that changed last year when suddenly the main driving force of demand for our services and the movement of goods was no longer international trade agreements, but something completely different, the global pandemic, which was consequential for our business and our industry and so many others. So if we could go to the next slide, please. So with all of that in mind, what I'll go through over the next few minutes are just an introduction to UPS and our activities in Ontario, some of our thoughts on the opportunities offered by CUSMA and how we have been working with our customer base across the province to help leverage some of those opportunities. And then finally, I will offer a little bit of context on the pandemic and specifically what it's meant for our operations and how we are actively engaging in efforts in Ontario and across Canada and indeed the world to try to help bring this challenging chapter to a close. So if we could move on to the next slide, please. For those of you in the audience who spend a lot of time engaging with small businesses and startups, I wanted to reach way back into UPS's archives for these pictures. And I guess they're not the standard images that you might associate with us, but I think they tell our origin story quite well. And I was thinking about it when I was preparing for this. In some ways, our origin story sounds a lot like some of the more contemporary tech world startup stories. You know, we started out in 1907 as a local messenger company in Seattle, founded by a 19-year-old named Jim Casey with a few of his friends and his brother. And they started out with just a couple of bicycles and a loan of $100. If we can move on to the next slide. We've come a long way since then, of course, and today we employ well over 500 million people and counting, serve in over 220 countries and territories, and have a whopping 125,000 vehicles in our fleet. So we always like to keep that origin story in mind when we're engaging with our small business and startup customers in particular. You just never know quite how big some of them might become eventually. And Canada was the first international market to which UPS expanded back in 1975, and we now have about 62 operating facilities across the country, delivering everything from urgent documents to groceries, and as I'll talk about a bit later, vaccines to Canadians. If we can move on to the next slide. Here in Ontario, we have actually our largest workforce in Canada. At the moment, it's around 9,000 and counting. And we operate here using a hub and spoke model. So we have major package hubs in Vaughan and in Caledon. The image you see there is of our Caledon facility, which is currently under construction. We're building it out, and once it's done, it will be our largest operating facility in Canada and feature advanced automation for package sortation. And we also have a dedicated healthcare campus with 3 facilities that enable cold chain service capacity for us in the province and across the country. If we can move on to the next slide. So to move on to CUSMA, as I will refer to it today, and the next slide, please. The very first point I would make, and I think this picks up a little bit on some comments Ross made, is that when we speak with our customers and businesses in Ontario about the opportunities offered by CUSMA, it's important not to forget what I would argue might be one of the greatest benefits of CUSMA, and that is continuity. CUSMA came in a context of a period of turbulence within the Canada-US trade relations. You know, in the backdrop, we had steel and aluminum tariffs, Canadian countermeasures, a fear of the former NAFTA being ripped up and not replaced by anything, forcing Canada and the US to revert to an old trade agreement or worst case scenario, WTO conditions. So it really, and then when we kind of take a step back and think about when COVID and the pandemic and the challenges for governments in all 3 countries, when we think about it in that context, I don't think that it could have come at a better time. So to have this agreement in place, it's important not to forget how important that is. In terms of content of the deal, the 2 areas that we really focus on when engaging with our customers, so on the small business side, certainly the fact that there is a standalone chapter on SMEs, small and medium-sized enterprises, is helpful. It creates a forum in which small businesses will have the opportunity to raise issues and give some visibility to supply chain concerns and trading issues specifically encountered by small businesses. And then in terms of our own operations and the movement of goods and supply chains, the chapter that we look at most closely is certainly the one on customs and trade facilitation. And within USMCA, we see commitments to the WTO Trade Facilitation Agreement as a benchmark, a global benchmark, and that's an important precedent for future trade deals with other countries. We see specific provisions for expedited release of express shipments, commitments to transparency, predictability, and consistency in customs processes, which are always important and very helpful for those moving goods across borders and wanting to plan ahead. And then we also have the introduction of new thresholds for low value shipments, as well as new de minimis thresholds being the threshold below which taxes and duties are not applied to goods that are moved via express. So if we could move to the next slide, please. When speaking with our customer base here in Ontario, in the run-up to the entry into force of CUSMA, our main focus was on ensuring that they were preparing their businesses to adapt to some of the changes and not to assume that what was the case for them in terms of, for example, rules of origin under NAFTA would be exactly the same and a carbon copy under CUSMA. The second focus was on documentation. There are some changes to the documentation requirements for the movement of goods under CUSMA, and it has been very important to ensure that any business that's involved in North American supply chains is maintaining up-to-date documentation which reflects the commitments under the new agreement. If we can move to the next slide, please. So, of course, we can't really think about CUSMA or trade anymore without remembering the context. We can't think about it in a vacuum. So for the last few minutes of my presentation, let me share a couple of learnings from UPS's perspective from the last year. If we can move to the next slide, and this is an image I wanted to share. UPSs have always taken a lot of pride in our work, but I don't think that any of us could have anticipated the extent to which we'd find ourselves at the center of the most important delivery to Canada, dare I say, ever. And that was, of course, our delivery of the first vaccines into Canada late last year. So this photo was taken, it was one of the very first batches of the Pfizer-BioNTech COVID-19 vaccine. Each of those boxes, they might look small, but they are mighty. They contain around 5,000 doses of the vaccine. And to date, over half of all the vaccines in the world that have been delivered by us. So vaccine logistics is absolutely at the heart of what we're doing right now and has all of our attention organization-wide. If we can move on to the next slide. So unprecedented, I know, is an overused word these days, but it really is the best word to describe what we saw in our network, in our Canadian network, our global network, and Ontario was no exception. If we think back to those driving forces of trade, suddenly the movement of goods last year was determined by the immediate needs of certain products and supplies by Canadians and Ontarians. And then we saw a second shift that was due to the consequences of lockdowns and the changes in the demand to our services as a result of that. So overall, we saw a huge spike last year, an increase which has been sustained for demand for the movement of goods. We've seen a dramatic shift from what we would call business to business delivery to business to consumer, driven of course by e-commerce. Ross mentioned, adaptability of businesses and those having e-commerce capabilities being perhaps better equipped to deal with some of the effects of the lockdowns. We've certainly seen that in our network in Ontario, and a real acceleration of consumer habits and preferences also towards e-commerce, towards home delivery. So what that has meant for us from an operational perspective is a loss of some of those traditional efficiencies of bulk deliveries to business locations, and instead making multiple deliveries to single residential locations. And that places a new type of pressure on a network like ours. So a question that I would put to you, just kind of, and the group as you think about some of this, is how might CUSMA and some of the opportunities within that trade agreement encourage businesses who have shifted towards e-commerce as a result of the pandemic? How might CUSMA further propel them to kind of use that new e-commerce platform as a means of going global? And that's a question that we are also asking ourselves. If we could go to the next slide, please. And this is my last, to get back just and close with this idea of continuity, which is really key to us these days with all of the changes globally and locally. Continuity for us, firstly, is in terms of our own employee base, who are essential service workers, many of whom are out on road or working in our facilities each and every day. Adapting, our own operations to protect and enhance their safety is priority number one. And as the vaccine starts being distributed as well to a broader variety of essential service workers in later stages, that will be something that will be key from our perspective too. From an operational continuity perspective, our cross-border operations are absolutely critical. UPS crosses the Canada-US border about 100 times each and every day. So that's large feeder vehicles crossing and bringing essential goods into Canada and exporting them from Canada as well. So ensuring that those cross-border truck drivers, as well as our pilots who are piloting planes into Canada, bringing goods in every day, ensuring safe passage for them in the context of an increasingly complex web of requirements, pre-arrival testing requirements, eventually inoculation, vaccination requirements is going to be, it'll be essential to ensure smooth continuity for the movements of those types of workers as well. And then finally, for the domestic movement of goods, I mentioned, that increase in demand for delivery to houses and residential deliveries. That means that you have a lot of UPSers who are working and who are out on the streets delivering or traveling to our facilities to help sort packages and prepare those package cars for delivery. Being designated as an essential service at the provincial level has been a core part of our work and efforts and engagements with government officials over the last year to ensure that as lockdowns evolve and restrictions change and are reintroduced, that they do not hinder our ability and the ability of our employees to go to and from work and also engage in work and provide those essential delivery services. So as we take a few steps back and look at CUSMA in the context of COVID, I would say in a nutshell, we see opportunity. We see opportunity potentially to leverage this trade agreement as part of economic rebuilding efforts, particularly within the small business community in Ontario. Thank you.
Well, thank you, Aileen. It's Flavio here at APMA, and we really appreciate the hard work from the logistics and related services through this period. I represent 300 companies that employ 100,000 people, making $35 billion worth of parts a year, and the vast majority of those end up across the border. And certainly COVID has given us an incredible challenge of once in a century clamp on the movement of people and goods, and industries that if they shut down, like we did in automotive for the first time in history for 30 to 60 days at the first peak, it starts to impede society's ability to pay for the things that are important. rents, mortgages, food, housing, healthcare. And so we've seen this incredible challenge in this period. At the exact same time as Daniel has said, we're entering this this incredible new relationship, renewed relationship between Canada, U.S., and Mexico. Just want to step back for a little bit of context. As Dan mentioned, we spent a couple of years on the renegotiation of NAFTA, and that was 2017 and 2018. And the context setting for that is an American president who campaigned on the renewal of manufacturing, pointing to really black and white binary key indicators that showed American manufacturing in decline, both in terms of market share, but also the types of investments that were going into making things. That really mirrored what was happening in Canada. In automotive, peak year of Canadian automotive was, in terms of units produced, was 3.1 million cars made in Canada in 1998. Right after we had signed the NAFTA, it was a real big boon for the Canadian landscape, and we thought it was going to be a trend that was going to carry us over the next generation of automotive building. Well, now we make about 2 million cars a year. And in part, it's because of the rise of Mexico, a jurisdiction that was at that point making 1.7 million cars a year and now is making about 4 million cars a year, but also the rise of global superpowers that nobody knew existed in the early 90s or knew would exist in the early 90s from Asian countries and European countries, and in the shadow of China. Biggest domestic market, biggest domestic producers, 30 million cars a year versus North America's 20 million cars a year, both on the sales and on the manufacturing side. For 25 years, progressive Canadian governments of all stripes entered into new trade agreements with Korea, with Europe, with Japan, and a whole bunch of other countries in the Trans-Pacific Partnership, and used as their main bargaining chip something called regional value content in automotive. So for a vehicle to qualify for tariff-free transport and sale into any of the 3 NAFTA countries, for example, it has to meet a grid of, here's 20, in the old NAFTA, it was 29 component classes, and you had to get to 60% of local content within each one of those classes, and then 62.5% totally as an aggregate, as a group within a vehicle. In all those other trade agreements, what we said was to get access for products that grow on 4 legs or other natural resources types where we are a superpower in Canada, we said we'd give away some of that requirement level, 55% in the Canadian-Korea agreement, 50% in CETA, 45% and down to 35% in parts TPP. All of that here in the automotive industry and in wider advanced manufacturing said, we're giving away market access to some very, very good very, very good competitors. The Japanese in TPP, but more importantly, the up and coming Malaysians and the Vietnamese. And the Koreans are no slouches. Home to Hyundai and Kia, they are incredible at making cars and making parts and making the systems that go in it. These are the types of things that brought the now former president of the United States to force Canada and Mexico back to the table on NAFTA. I'm not sure, and Dan might smile when I say this, that President Trump knew that Canada was part of NAFTA, but he certainly knew that Mexico was. He certainly saw the numbers of the migration of those automotive investments and major advanced manufacturing investments going to Mexico instead of the affectionately described Rust Belt, which is the Midwest states, a cluster that includes Ontario and Quebec, which is still the biggest cluster of automotive production in North America, and I would argue anywhere in the world outside of China. We highlighted manufacturing's importance during the NAFTA renegotiations. I'm leaving a lot of the sausage making out of it. We ended up with an agreement that for the first time since the original NAFTA that raised the regional value content. So if you want to sell a car made in Ontario or made in Coahuila to a customer in the US, which is the target customer for 75% of our final vehicles, you have to meet a 75% threshold. And those parts have to meet a 65 to 75% threshold as the parts themselves. And then within those parts, if you're making them out of steel and aluminum, they have to be 70% of that steel and aluminum has to be sourced locally. These new rules came into effect in the middle of a pandemic. And the uniform regulations by which we adjudicate compliance came at the same time, which is unheard of, which is not the way that trade agreements are negotiated. They're usually negotiated over 7 years, and somewhere over those 7 years, somebody comes up with the uniform regs, and then we digest them for a couple of years, and then we do a 5-year transition, and it's smooth, and everybody kind of figures it out. Now we just said we're going to negotiate over a year and a half. It's going to come into force within a year, and then you have a 3-year transition. And by the way, I didn't give you your rules until the last day. And while we got those rules, we had the first unprecedented border closing between Canada and the US. And so we said, goods can go, but personnel can't. Oh, hold on. If the personnel is critical to moving those goods and they're essential, whether they're at UPS or whether they're part of your own logistics team, they can go back and forth, but executives can't. Unless maybe they're doing a program launch and they need to be there, or they're specialists and they need to be there, but it's going to be adjudicated by the individual Canada Border Service agent. And so we've not only closed the border for the first time, we've also delegated the authority to individual agents that, well-intentioned, by their definition, are going to be inconsistent with the other agents on a policy that has shifted in terms of importance between the peaks of the pandemic. It's been very difficult to be in the car business, in the manufacturing business, and manage it the same way that you would have in an efficient manner last year, because we've got new rules that, by the way, will be enforced are being enforced now as of January 1st. And they're being enforced by individual agents who are also enforcing a border closure that has no foreseeable end right now for lots of good public health reasons. And we are shipping goods back and forth to a market that isn't closed. The Canadian automotive manufacturing sector is dependent on demand from the US. And the difference in the way the US federal government and state governments have managed the pandemic versus Canada, for us in automotive, means that auto sales are robust again. And they're within 5 to 10%, depending on program, of what the predicted sales demand would have been pre-pandemic. And so our customers are there, and we're sending goods, and we're building cars, and they're going down there, but it's made it very difficult to manage. The importance of manufacturing has been, it hasn't been sexy, for at least a generation of industrial and political leadership. And I think that we've all expected that lots of these things that people make are commoditized, and they're available cheaper and more efficiently from low-cost jurisdictions that chase the lowest cost of labor. And so something that happened in March was the whole world was looking for these, and the whole world was looking for these, and they couldn't find them. The whole world was looking for ventilators, and they couldn't find them. Test swabs, and they couldn't find them. The automotive supply sector, both in Canada and the US, stepped to the plate and said, give us the specs, give us the volumes, we'll figure it out. And we pivoted. Here in Canada, 77 companies put their hand up, and 25 of them will make auto parts, made the largest industrial order of PPEs and life-saving ventilators in Canadian history. These were automotive firms that pivoted. The pieces I showed you were from a company that makes center consoles for Toyota RAV4s, companies that make dashboards for Dodge Rams, and companies that make HVAC for Chevy Equinoxes, companies that make tools for Ford and Toyota. What we've established and what COVID has done for the manufacturing sector is on both sides of the border. We've understood that there's also an intrinsic value in being in the manufacturing business. And that in times of war and pandemic, you need things to get between the enemy or the virus and the most vulnerable. And the only way you can get things are to either buy things or make things. And when everybody is buying the same things and the markets are restricted by supply around the world, you better be in that business. And we're in that business. And so the outlook for the CUSMA, the outlook for post-pandemic is going to be lots more advanced manufacturing in those regions in North America that are very good at it. A reversal of this trend without getting too nationalistic on sourcing, but to even the playing field with all of those other jurisdictions that Dan counsels on, that use non-tariff barriers to block American goods or Canadian goods or Mexican goods from getting there. I think the CUSMA is a level setter, and I think that COVID has brought out a lot of the ingenuity and the innovation that manufacturers in this region had a really hard time over the last 25 years convincing people is critical to the health of the economy. And with that, thank you. I'll pass it to Dan.
Great. Thanks to all three of you for an insightful set of presentations. And we'll pause now and folks can start putting their questions if they have any last minute questions that they'd like to get into the chat, and we'll freshen up and we'll see you in just a few minutes. Okay, so with that, again, thanks to our panel. I do have to strike something I just said, or said a few days ago, that for your questions, do not put those into the chat. Put those into the Q&A, and we'll be monitoring those. That Q&A button at the bottom. Put your Q&A in there, and we'll go ahead and do that. I know that we'll get a number of those, so I'm just taking the prerogative of the chair. I'll bucket those together if we see similarly situated and maybe refresh. You don't need to write a treatise or anything. You can just put freestyle and we can interpret pretty quickly as we go in terms of those issues. But just a way to tee this up a bit with, I just asked all three of our panelists this, just mindful of our audience, is that if all of you touched on COVID and just how important it is that, companies are trying to figure out how to keep the lights on in some places, right now. And so now we're switching gears that now CUSMA is in effect. If I'm an economic developer or I'm somebody looking and talking to a company about expanding or investing into Canada, or for that matter, North America, Eileen, you talked a bit about their stability now, and we have a customs and trade facilitation chapter. We have e-commerce, SMEs. Are there other things? Are there other parts of CUSMA that you would champion? And then Ross, same question for you, and then Flavio, and then we'll dig into some of the others that are starting to pour in as well. But what's the pitch right now for a company looking to expand, and how do you use CUSMA as a hook, if you will?
Thanks, Dan. Great question. So I will borrow from our small business experts at UPS what their pitch to businesses in Canada when we talk about trade agreements, when we talk about CUSMA, their pitch in terms of what a business needs to do first and foremost is research, research, research. We never encourage businesses to never underestimate the importance of taking the time to understand some of the markets that you might be planning to expand to, or to start developing networks and relationships with potential business partners in other markets. And the benefit, and to kind of link it back to CUSMA, I would say, is that with this new trade agreement, we now have a number of different excellent resources that businesses can turn to and tap into to speak with experts and to help assist that critical research phase before you actually go live. So I'm thinking EDC, I'm thinking the Trade Commissioner Service, I'm thinking the Canadian Consulates General in the US and Mexico, who are also extremely knowledgeable about more local market issues. Do not underestimate the importance of doing that research, is what we say to businesses, because the more time you take to build a cast iron plan and really have a detailed understanding of the market you'll be trading with, the more likely you will be to succeed. But I'll hand over to Ross maybe from an EDC perspective, certainly with more expertise on that than us. But that's a flavor of what we discuss with our customers here.
Sure, thank you. From our perspective at EDC, I think there's a few different things. One is that you add with CUSMA now a significant amount of certainty. So we have an understanding of the rules of the road, in which case we haven't for the last few years, which is a significant importance if you're making investment decisions and you're trying to get people to plan where they're going to put their capital and to build their businesses. The other thing too is that with CUSMA, Flavio alluded to it, but there's a lot of trade agreements that Canada has in place. We're pretty much the only G7 country that has trade agreements with the rest of the G7 and many more developed markets beyond that. So you can use Canada as a platform, and as long as you're mindful of the different rules, whether it's CTPPP, CUSMA, CETA agreement, you can use Canada as a way to get into all those markets without having to, relocate, readjust. And it's something that we're starting to see from foreign direct investment as well, as people are looking at Canada as an opportunity to platform into the United States or to platform into Europe, rather than having to wait on the long delayed US-European trade agreements and some of the other places. And especially with the agreement that Canada's reached with the UK, we're, despite Brexit, we're also getting preferential access to that market as well, compared to some countries where they're still having a lagging issue in terms of negotiating with the UK. So there's a lot of opportunities in Canada. And I'll just make a plug. It was very nice to get that plug from Mindigo, but along with EDC, you have a host of other services, both at the federal level, provincial level. You have the Global Affairs Canada, and we're all working, trying together as a one team. Sometimes we're not as successful as that, especially given some of the challenges of COVID, where we can't interact as closely as we'd like to. But the goal is to try and help everybody, especially Canadian companies, access these agreements and use them to grow their businesses. Maybe I'll pass over to Flavio for his perspective.
Sure, Dan, I think what you asked, and I'll bring it to ground on automotive, is, what would you say to, if you're an economic developer talking to a company, to point them to Canada because of the CUSMA? Look, there's a few things here. 80% of the Canadian population is within 60 miles of the US border. And so for all intents and purposes, putting aside a border, we are, in essence, seen from a satellite, part of that U.S. market, especially in the Northeast. We've got the highest level of post-secondary education in the OECD, and that's especially true in Ontario and Quebec. So when you're looking for workers, and around the world, people there's a labor shortage and a skilled labor shortage. I spent a week with Porsche last year, and we went from facility to facility in Germany working on, what are some of the strategic issues that we share between Porsche and some of the Canadian suppliers here in Germany and Ontario, and their biggest issue was shortage of labor, and educated labor and skilled labor. Here, of course, we all share the same problem, but we're ahead of the curve of our competing jurisdictions. The new CUSMA has a higher RVC barrier for market to the richest market in the world. So in automotive, the number one market for OEMs is the US Northeast and the US Southwest. So if you want to access that market, now the barrier is higher. You've got to source 75% locally. And there's an automotive cluster in Ontario that goes from essentially Detroit to Toronto. That's 250 miles long and has an industry that delivers $38 billion worth of parts a year. You can find it all in essentially the, if you plant yourself right in the middle, you're 100 miles in either direction. And in that cluster, to distinguish itself from the rest of the Midwest cluster, which is the biggest automotive producing cluster in the world still, Ontario and Quebec, public health, public education, and we've got globally relevant finance clusters, globally relevant tooling and automation cluster, and a globally relevant IT cluster. So you're going to set up a business. You need those services. You need those subcomponents. You need access to capital. You need access to people on a report card. You couldn't do better than to land in Ontario or Quebec.
Flavio, let me. There's several questions that kind of follow up to that. I'm going to bucket a bunch of them. Some have to deal with vaccines and PPE. Essentially, have we tapped out in Canada on PPE production? Are we about where we need to be? Is there the ability to produce vaccines? So that's more of a COVID-related question. And then Secondly, and just mindful that we only have about 5 minutes left as well, and I want to get over to Ross and Eileen on a couple other questions, but if you were advising government officials or cities, et cetera, on how to help manufacturing right now, what would you be saying? I mean, what are you saying, I guess is the better question. Those are two somewhat unrelated, but linked to a degree.
Sure, I think on PPE, there was a gross blunt effort last year to catch up in in March, April, May. And I think that this country's domestic supply is caught up with demand. And I think all that other supply around the world for some of the cheaper stuff that people are using has caught up. I think we're okay on PPE. We've seen directives, of course, in other jurisdictions where we're talking about public health is saying double up or use a better mask, ASTM3 or N95. That might put a little bit of a squeeze on, but we've got domestic producers now that we think are there for ramp up. On vaccine, unfortunately, I keep getting asked whether auto suppliers can make vaccine. We can't. The automation companies, of course, can help tool up, but there is something really special about vaccine and pharmaceuticals that are best left to the companies that can do it. We do have domestic vaccine capability here, but it doesn't match the companies who have come up with the IP. And so we saw an announcement last week that Bayer and Sanofi were going to help with Pfizer's manufacture here. So they may ramp up in the coming months under a contract manufacturing. And we saw news yesterday, the day before, about a Canadian manufacturer that is of vaccines that's got one ready for Health Canada approval. We may get there. I think we all need to manage our expectations. What's going to happen is that I think the government has got a plan to get everybody vaccinated who wants to be vaccinated by September, but that line doesn't look like this. That line's going to look like this. So I think we've got to be reasonable there. What are we telling the government to do for manufacturers? Well, both levels of government have kind of woken up to manufacturing in the last through the NAFTA renegotiations, and especially since manufacturing saved us on the PPE front. All we're saying is remember us after you need us.
Good point. And just Eileen, and Ross as well, if you can comment, what do you think the readiness is right now? It's embedded in several of the questions that we have. What are you seeing on the ground? I mean, I have my ballpark number. We saw a huge rush up to the implementation date, probably through Labor Day, and then we didn't see many companies after that try to get in compliance. I think companies with relaxed enforcement just said, we'll deal with that when it comes next. Are you seeing similar and the same elsewhere? Maybe Eileen, from UPS perspective, are you seeing compliance with CUSMA getting ready? And maybe Ross very quickly, and we'll start wrapping up here.
From a customs brokerage perspective, so UPS provides customs brokerage services as well as a licensed customs broker in Canada. We did see a rush in the run up to entry into force of a switch over to the new CUSMA documentation. So there certainly was a visible uptick in the number of customers that we were engaging with, who were making sure from a compliance standpoint that they had made all of the necessary changes to their prior NAFTA documentation and understood what was required of them to keep their supply chains compliant from a brokerage perspective. And that rush has kind of has died down a little bit from what we've seen, which is a good thing. It indicated to us that the majority of our customer base were informed. I mean, we did a lot to try to communicate with them to make sure they were aware of deadlines coming up and their obligations as traders. So that's something that we definitely did see from a cross-border brokerage perspective.
Okay. Ross, anything from EDC perspective?
Yeah, we saw similar things, but the one thing I'd also remind everybody is that under the NAFTA agreement, only about 50% of Canada-US trade was actually taking place under NAFTA. And that was really because the cost of compliance and cost of documentation is not zero, right? It's a significant amount of effort, and especially in the small and medium-sized space, the tariffs that some of these companies were facing before under the most favored nation, WTO tariffs, were not that high. So our expectation is that you saw a lot of rush of companies that were impacted, whether directly, like the auto chapter that had some significant revisions, or other ones that need to bring the documentation into standards. But with some of the changes, especially the changes to de minimis importing rules, especially in Canada, and some of the other stuff with some of the small and medium-sized enterprises, there's not that pressure right now to bring themselves into compliance. Over time, we expect as some of them grow and as some of them grapple with some of the new chapters, there will be some, but we're not surprised to see that there was kind of the initial rush of those that needed to, and then it's slowed down as people who are ready, and then there's not that pressure on the other side.
Yeah, I think it's certainly in terms of ease, paperwork requirements, also chemicals, polymers, technology companies, e-commerce, there are a lot of what I call fresh coats of paint, making it easier in the agreement. As we've worked with companies, particularly in that polymer and chemicals coatings, those types of folks are seeing a lot of benefit in the agreement right now. Eileen, last question, and I suspect this may be coming from our great friends at Seneca College who are doing yeoman's work here, or yo person's work here. What are the jobs in public policy available at UPS right now? And then we'll end on that note.
What a wonderfully timed question. It's rather rare. We are a small but lean public policy team in UPS, but I am currently hiring for a director in Ottawa to work with me on public policy for UPS across Canada. And then just one thing I would add, a lot of our senior management at UPS actually started out their career in the company in the operations, delivering packages or sorting packages. So never underestimate the power of a part-time job in the UPS operations. It's continues to be one of the very best ways to learn about our organization hands-on.
That's great. Well, that's a great positive note on which to end. I do note that there are a number of questions about what's happening at the border, particularly getting bodies across along the lines of what Flavia was talking about. It's certainly something we confront at Thompson Hine, and I know our great friends over at Fragament as well are doing the same as we're navigating this, because at the end of the day, we're all in the people business, and so getting folks across the border is an issue right now. And just encourage you to reach out and touch somebody, whether at our shop or Fragment or great people like that. So without further ado, I again thank our panel. That's a great presentation. You're going to hear a little bit more about CUSMA from Minister Fedeli in just a while here. But with that, I'll turn it back over to you, Belinda and Cosmina. Thank you.
Thanks, Dan. Thanks for having us. Amazing presentations. I personally learned a lot from UPS, from Flavio as well, from you, Dan, and Ross. My thanks to EDCO for having us, for being able to sponsor the session. And my thanks to all the amazing economic development officers who are working with me currently on bringing foreign investment to Canada. Pass it on to Belinda.
Great. Thank you guys so much. What a great session. Love all the questions in the Q&A, so keep engaged, members. That's awesome. Thank you so much, Cosmina, and thanks to Fragament for sponsoring this extremely interesting session. It's just great, guys. I'd like to now introduce our special guest, the Honourable Vic Fedeli, Minister of Economic Development, Job Creation and Trade, to say a few words.
Hello, everyone. Great to have this opportunity to connect with EDCO members and economic developers all across Ontario. It's more important now than ever that we share knowledge and work together to find solutions for our changing economic landscape. Today's session about opportunities to evolve on with CUSMA is a topic our government has been focused on for some time now. As Ontario's Minister of Economic Development, Job Creation and Trade, our number one priority is to make Ontario open for business and open for jobs. Helping our businesses remain competitive is critical, and increasing trade and investment around the world is necessary for Ontario to achieve this. Trade agreements certainly play an important role. Our government welcomed the implementation of what I like to call NAFTA 2.0 last July. It reinforces the long-standing economic ties between Canada, the US, and Mexico that have benefited Ontario businesses and workers under NAFTA for nearly 25 years. and it provides greater certainty to help businesses grow and protect jobs across the continent. As the largest subnational exporter within the Canada-United States-Mexico Agreement region, Ontario recognizes the importance of free and fair trade and supports maintaining open markets with our largest trading partners. Supply chains between the US and Ontario are highly integrated, and about $400 billion in two-way trade in goods travels across the US-Canada border in every year. Just look at CUSMA's effect on Ontario's auto industry, for example. CUSMA revised the rules of origin for autos. That helps preserve Ontario's highly integrated supply chains with the US and Mexico. Over the last 25 years, these supply chains have helped make Ontario the #2 subnational jurisdiction in all of North America for vehicle production. And these supply chains are critical for supporting the jobs of 100,000 Ontarians who are employed in the auto sector. The revised CUSMA rules may also help encourage long-term investment in the province's auto sector by diminishing incentives to make investment and sourcing decisions based on the availability of low-cost labor. CUSMA also guarantees annual duty-free access to the US for over $30 billion worth of Canadian auto parts, well over what Canadian parts manufacturers currently export. Across Ontario's auto supply chain, we look forward to growth among domestic suppliers and new foreign direct investment. In addition to preserving tariff-free access to the US and Mexican markets, the deal maintains other key elements of NAFTA, such as rules on temporary entry that make it easier for the province's business professionals to work in the US and Mexico, and vice versa. These rules have directly benefited many Ontario businesses and independent professionals actively doing business or working in the US. And they have helped facilitate the flow of skilled American workers into the Ontario labor market. These key elements of the agreement will help support the hundreds of thousands of jobs across the province that depend on trade with the US and Mexico. CUSMA also preserves NAFTA's state-to-state dispute settlement mechanism and improves certain elements related to transparency and expediency. This will continue to provide Canada with the same means to challenge future American or Mexican actions that unfairly disadvantage Ontario exporters or investors. In the spirit of maintaining our long-standing trading relationship, we are disappointed that the US administration has chosen to move ahead with a new executive order on Buy American. We are concerned about the impact that measures to restrict access to the US government procurement market could have on Ontario workers, families, and businesses who rely on the US-Ontario trading relationship. Now, if Ontario were a country, we would be the US third largest trading partner. We're also the #1 trading partner with 19 US states and the second largest trading partner with 9 others. This trading relationship supports millions of jobs on both sides of the border, and as mentioned earlier, is worth approximately $400 billion annually. Ensuring strong trade ties is vital to the businesses and communities these trade relationships support, particularly as our joint economies begin to recover from the COVID-19 pandemic. Open and competitive contracting benefits people on both sides of the border. Buy American policies disrupt existing Ontario-US cross-border supply chains and erode the strong relationship that we have built over the years by preventing Ontario businesses from competing for government procurement opportunities in the US. Our government will continue to call on our federal government to ensure Canada is exempt from any Buy American provisions, and instead, we will continue to advocate for a Buy North American approach. We will continue to highlight the costs of Buy American measures to businesses on both sides of the border, and we'll work tirelessly to ensure a stable and competitive business environment that creates jobs, opportunity, and growth. And that is part of the reason why we can't just rely on Canada's international trade agreements. We want to continue to unlock opportunities we can all benefit from and get ready for the better times ahead for all of us. Ontario is also pursuing strategic investment and procurement agreements. We call them SIPAs with the US states. These SIPAs aim to make it easier for businesses in our province and in US states to do business with one another. In December, Premier Ford and I announced the first of what will be, we hope, several SIPAs with partner US states. Our first agreement between Ontario and Maryland is a platform on which to build on the strong economic relationship that we have developed over decades of engagement across the border. The agreement will seek to boost collaboration in areas including automotive, advanced manufacturing, PPE production, and government procurement. The Ontario-Maryland agreement means that we can continue to create opportunities for businesses in a wide range of sectors and deliver real improvements in market access, job creation, and investment. Our government continues to take further steps to create the conditions for increased trade and investment and to secure more certainty for Ontario businesses. Since taking office, we have continued to lay the foundation to ensure that Ontario is not only successful, but highly competitive. We know that making it easier for companies to do business here in Ontario is integral to attracting investments. And we have heard from businesses from across the province that Ontario had become an expensive jurisdiction in which to do business, while Premier Ford, right from the beginning, knew that we needed to change course. From day one, we had worked to reduce the cost of doing business in Ontario, and now we can tell you that that cost has been reduced by $7 billion a year, every year going forward as well. And that's through lower WSIB premiums without touching the benefits, accelerated capital cost allowances, less tape, lower electricity costs, lower taxes. These are important investments that will help the businesses across our province and attract investments from around the world. Ontario is ideally positioned to be a safe haven for growth, stability, and prudent governance in North America. We see Ontario as the natural partner for international companies seeking to establish or grow their presence in North America. To further maximize these advantages, we're launching a new investment attraction agency called Invest Ontario that will provide customized tools and services to assist companies establishing in Ontario. Invest Ontario will be run by people with private sector experience. And they're not just deal makers, they're going to be deal hunters, and quite frankly, deal closers. We're going to ensure that they have the tools and expertise they need to tailor the investment experience to each company looking to invest, whether it's a domestic manufacturer looking to expand or a foreign investor looking to establish a North American foothold. It will initially focus on key sectors where our province already has a competitive advantage: advanced manufacturing, life sciences, technology. We're also supporting existing exporters and fostering new ones when it comes to pursuing trade in an increasingly digital world. Operating in this new environment with restricted travel and social distancing has required all of us to adapt and think of new ways to promote trade and investment outside of traditional trade missions and in-person international conferences. We very quickly pivoted our export programs and transitioned to a digital format. We've now worked successfully with multiple Ontario delegations to take part in virtual trade missions across diverse industry sectors. We're also putting out the red carpet for companies interested in working with Ontario. We have a network of international trade and investment offices that raise Ontario's profile and build commercial relations in key markets around the world. Extending the reach of business through national and international trade will play a pivotal role in Ontario's economic recovery and sustainability. We're pleased that we're still able to advance Ontario's economic interests in key markets throughout the world while supporting important business connections for growing companies, all on a completely digital platform. With Ontario's recent budget, we've taken another step forward with foundational changes to improve our competitiveness. This includes further reductions to business taxes and a comprehensive plan for industrial and commercial electricity rates that will bring Ontario's prices below the US average. And all of that took place on January 1 of 2021. We're also supporting employers and workers during the COVID-19 pandemic. Ontario's Small Business Support Grant is providing a minimum of $10,000 and up to $20,000 to eligible small business owners during this challenging period. Small businesses will be able to use the support in whatever way makes the most sense for their business. Other ongoing supports include property tax and energy cost rebates that I mentioned earlier, holding electricity prices to off-peak rates, and one-time grants for small businesses of up to $1,000 for PPE, and the list goes on and on. Throughout this pandemic, our government has worked tirelessly to help Ontario weather the storm. And through it all, people and businesses have come together in what Premier Ford calls the Ontario spirit. Whether by shutting down to flatten the curve, implementing new health and safety protocols to keep employees safe, or overhauling business models overnight to pivot manufacturing operations to make PPE, Ontarians are making a difference by pulling together while staying physically apart. There's no doubt that the road to economic recovery will be long and difficult. And we'll need to continue to work together to continue to make great progress and ensure Ontario's businesses and economies come out of the pandemic even stronger than before. Thank you all again, all of the EDCO members, and to those of you here today who have joined in these discussions for the recovery of our economy. Enjoy.
Great. Thank you, Minister Fedeli, for your important message to economic developers as we begin to rebuild and rejuvenate Ontario's economic prosperity. Now we're moving on to some exciting awards. Each week until the conclusion of the conference series, we'll be announcing the winners of the EDCO's Awards of Excellence. Congratulations to all the awards participants. Judges' feedback was that the economic development response to the pandemic was fabulous. Of course it was. It's now time to announce more of EDCO's Award of Excellence winners. Please take a look at our award announcement. Congratulations to all the winners. We'll now have a short break where you can continue conversations in the chat, get a drink, or take a bio break. We'll see you back at 10:30 for our next session, Evolution in Diversity and Inclusion in the Workplace.
Growth is an exciting journey for businesses, big and small. They look ahead, charting a path toward their next milestone. Greater impact, winning a contract, a larger team, a better facility, and even a new market. The opportunities are vast, but growing beyond borders also comes with more risk. At EDC, we know that risk is a line that only the game changers cross. Where others see uncertainty, they see possibility. That's where we come in. We are the international risk experts, among the lucky few who witness their bravery and commitment. Inspired by those who turn dreams into reality and pursue their passion, our purpose is to help them navigate the winding roads of global markets. We are there at every turn to guide them when needed and encourage them to accelerate without looking back. We turn risk on its head. We encourage our customers to aspire without borders because we've got their backs. And we believe that their potential has no limits. We take on risk so that they can take on the world.